Good morning, everyone. Good morning. It is Monday, April 21st, 2025. It is so good to see you all this beautiful and amazing Monday morning here in Austin, Texas. Lots to go over this Monday morning, you all. We've got a lot going on. And we are going to update the new listing to pending ratio, the single best leading market indicator available for the entire area. We're going to take a look at inventory. Something really exciting happened over the weekend. I call it exciting. Some people might call it something else, but I call it exciting. And we've got a lot going on in the finance and economic side of the world, especially with builders announcing not only their earnings, but also their forecast for the rest of 2025. We also have Zillow just updated their 2025 forecast. Very eye-opening, just to see what they had to say as far as their expectation for 2025. And you can see behind me what's going on with the bond market. Thankfully, so far today, we've experienced a little bit of an improvement within the bond market, but at one point, it was up about, half a basis point. But right now, let me turn around and see what's going on right now. Right now, we're up by 3.2 basis points, and we're actually up by 5 basis points at one point. So there you have it, you all. Lots going on today. Next week, on the other hand, is going to be even more important than this week with the economic calendar and all of the news that we've got coming on next week, specifically GDP, gross domestic product, PCE, personal consumption expenditure. We've got unemployment next Friday. This week, we've got some permitting data, some housing starts, builders issuing their earnings report. Of course, we had D.R. Horton, the nation's America's builder, and they are, of course, headquartered here in Texas. They issued their forecast and also their earnings, and we're going to go over a few articles because they've got some really interesting things to say about the housing market, and they have their pulse on the housing market. They know exactly what's going on within the housing market. So let's go ahead and go at it, but we are going to start this morning by going over the new listing to pending ratio. And really quick announcement before I start digging into the data, please check your email. If you are a Team Price member, you received the top 100 opportunities for the Austin area early this morning. That is a great way for you to interact with your clients, your sphere, your people on social media. This is where we curate the top 100 opportunities within the Austin area. We look at properties that are back on the market with price drops, where the sales price is dramatically lower than the tax value. And out of the many homes available on the market, we just pick the top 100 within the 6-county area. So take a look at your email, post that on social media. It has a link to your personal subdomain so that you can interact with your clients, your people that are following you. So really good, exciting resource. We try to get that out at about the third week of every month, and that went out early this morning. So be sure to check your email and then publish that on social media. Get some really good interaction going with people that know you and people that are interested in the Austin market. Let's go ahead and get the new listing to pending ratio up and running. First thing we're going to do is we're going to go backwards in time a little bit, and we're going to check to see if we have to update any of the pending information. As you know, agents, builders, they can update the pending for weeks and weeks and weeks from now. And that is why we have to update this information. This is going to go from 421 to 424. Let's go 1 week before. That's going to be from the 31st all the way to the 7th. And that's going to stay steady at 601. Let me do a few other ones just to make sure that we capture everything. Perfect, 603. We've got 572. That's all good to go. We've got 602. This has to change to 602. Let's make sure that from the 3rd to the 10th, we're good to go. That's going to be 518. And let's keep on going. I want to make sure that the information that we are publishing is super accurate. 544. We always have those 1 to 2 stragglers that show up very like after a few weeks. So we were at 470. Okay, so actually, no, this is interesting. This right here goes to 474. And let's go from the 3rd to the 10th. That's going to go 520. You see, it's amazing. Builders are notorious where they just leave the property active on the MLS. And then 2 months later, they change it to pending. Drives me absolutely insane when they do that, but it is very common they do that. That's why we go backwards in time and we update the pending. Now, at 11:59 p.m. tonight, everything else locks in. That'll never change ever, ever, ever again. So tomorrow morning, when you log in and you go to the Team Price website, Insight and Statistics, you are going to see the new price increase, price drop, price decrease, back on the market, active under contract, all locked in. And then we will continue to update the pending for the foreseeable future. Now we can start updating what's going on this past week. Number of new listings, 1,258. 1,258 new listings. That's okay. It's Easter weekend. We knew that was going to happen. Not a big deal. 1,258 Easter weekend to be expected. Let's take a look at price increases. We're at 144. That is a fairly low number. Let's take a look at price drops, see what's going on. 1552. There's that 92%. We just broke the 91% over the past 2 weeks, which would be 3 weeks ago and then, 2 weeks ago, 3 weeks ago. Let's take a look at back on the market. What's going on with back on the market? We're at 178. That's going to put us at 14%. That broke the previous 2-week trend. That's not bad. Let's take a look at active under contract, 423 active under contract. And now you get to guess. I need 5 guesses. How many pendings? I need 5 guesses. How many? Okay, Seth is going to start us off at 202. We are 1 down. Let's go ahead and just get 4 more to go. Rob coming in at a fairly bearish 189. We've got Harold coming in at a bullish 245. Melanie at 234. Rowan coming in at 230. We've got Charmaine at 221. And we've got Ava at 225. We've got Liz at 215. Love it. Y'all are like super engaged, which is fantastic. I'm excited. Let's go ahead and click on this and see what's going on. And we are at... Oh, I have good news to report. The person that reported the highest was Harold at 245. It's higher than that. It's higher than that. It's at 251. Not bad. Well, I mean, it's pretty sad that we're super excited at 251 pendings for a population of 2 million people, but that's okay. That's okay. We've seen lower numbers. That's why we're so excited. So we are starting the week at a 0.47 ratio, mainly because we had a very low number of new listings come on the market because of Easter week, Easter weekend, but I'll take that, 251. I was expecting something in the lower 200s. I would have come in around 210 or so. So the fact that we're at 251, I view this as a win, even though we're at a 0.47 ratio. Now, last week, which is 2 weeks ago, last week is 2 weeks ago, that ratio is at a 0.51. Now, we can see that we peaked at a 0.80 back in March 17th. So over the past month, that ratio has gone down by quite a bit. Let's go ahead and just take a look at the monthly, and then I'm going to print this out as a PDF, and we're going to review some of the charts. First thing we're going to do is go a little bit backwards in time, go back to March, and that stays the same. Let me go to February to see if we can update anything in February. That's going to stay the same. I'm even going to go all the way back to January, and that's going to be 1543. That stays the same. So let's take a look at the number of listings so far this month. We are looking at 4,189. 4,189 listings so far this month. That is amazing. Let's take a look at price increases. We're at 448. Let's take a look at price decreases. We are at, wow, 4,628. 91%. We have to go all the way back to October to get that 91%. Back on the market, what's going on? We're at 505. That's going to be 12%. We have to go all the way back to 2004 to get a 12%. So we're at 12%. Let's take a look at active under contract. We're at 1406. And now let's take a look at pending. Okay, yeah, I'm going to have y'all guess. Okay, we are 21 days into the month. How many pendings? What do y'all think? Let's just get a few guesses. I'm not going to go for 5. Whoever is bold and wants to guess how many pending, this is for the entire 6-county area for the entire month, from April 1st all the way to April 21st. Melanie is going to start us off at 849. Man, that's a good guess, Melanie. I'll say that much. Let's just get like one more guess going here. I'm curious. Okay, we've got Farron coming in at exactly 1,000. Well, I'm going to split the difference with you all because we're at 947. 947 pendings, y'all, so far this entire month. Wow. That puts us at that 0.5 ratio, which is a tough ratio. I mean, that means that inventory increases at just an exponential rate. And you can see that the difference, the numeric difference between new on the market plus back on the market minus active under contract plus pending, we're plus 2,341 so far this month. So far this year, we are plus 6,801 so far this year. That's just amazing. Let's take a look at sold. What are we looking at? We're at 1196. Withdrawn so far this month, we're at 436. April of last year, we were at 568. We still have 11 days left in the month, and we're already at 436. Let's take a look at expired. We are at 169 expired right now, 169 expired. Also, a little bit of a high number because we know that expireds usually happen towards the end of the month. Let me go ahead and just move this out of the way so that I can print all of this as a PDF and we can review some of the graphs, some of the charts. How does this month compare with previous months? And we can learn what is going on with the market. So just give me 1 second here so I can convert this to a PDF and we will go over all of this information. It is saving. Oh, let me move this folder out of your way and let's go ahead and just open this bad boy up. Okay, so we've got this as a PDF and let me go ahead and open this up for you all so you can see what is going on. Let me adjust this so you can see the entire screen. Okay, there we have it. Perfect. There we go. Perfect. Perfect, perfect, perfect. We're at a 0.47 ratio so far. On the weekly year over year, we're down 11.8% on the number of new listings entering the market. We're down 169. We're going to be down. This is not going to go positive. We've got 11 more price increases compared to last year. We've got, take a look at that. We just broke that trend right there. We've got 130 less price decreases compared to a year ago. It's because of Easter week. That's why. We've got 67 less back on the market, and we have, oh, this is just amazing. We've got 553 less properties that went under contract. Of course, we know that this number is going to decrease, meaning it's going to get better. So it's not going to be 553. It'll settle somewhere around the 250s to 300. I am more focused on the previous week, where the previous week we were up 34.8% on the number of new listings entering the market, and yet we were down 24.5% on the number of properties that went under contract. That is a just unbelievable difference. You can see that last year the ratio was 0.73. This week the ratio is 0.47. Last year, 2 weeks ago, the ratio was 0.87. This year, 2 weeks ago, the ratio 0.51. Let's take a look at a few more things. And let's focus on the monthly right now. We can see the monthly that we are at a 0.50 ratio, and we are up so far. Let's take a look at the difference, 2,341. And let's take a look at the number of active listings. When you look at let's look at year over year instead of month over month. Year over year, we are up 15% on the number of active listings currently on the market. We are down 21.9% on the number of new listings, but keep in mind, we still have 10 days left in the month. Still 10 days. So we've got a third of the month left, and we're only down by 21.9%, which means that we are going to be up on the number of new listings this month compared to this exact month last year. We're going to bridge that gap because we're only down by 21.9 and we've got 33.3 days left in the month. So that number is going to go up. We're going to end up being positive. I would say we're going to end up closer to that 10% on the positive side of things. That is going to beat last month where we were up 7.8%. Now, on the pending side of things, we are 66% into the month. We've got 33.3% left in the month, and yet we are down 59.7% on sold, and we're down 47.1% on pending. Both of those are going to be negative. My prediction is that we're going to be negative on the pending side of things by double-digit percentage. It's actually going to be higher than the 10.6% that we saw both January and February. I'd say when this is all said and done, we're going to be down about 12.5 to 13% lower. So we're going to be on the positive side for the number of new listings entering the market at about 10%. We're going to be negative over 10% on the pending side of things. That is where we are going to be. So really just amazing to see what's going on here. Let's take a look at the difference between the new and the pending. The difference between the new and the pending, we are at 2,341 difference between new and pending. And you can see that that right there is going to be the single largest April reading on record. If we take everything that's new in the market and then we subtract everything that went under contract, the difference between new and pending at 2341, that's the highest April on record. And you can see that we've already completely blown 2024. When you look at all of 2024, it was 1772. That's for the month of April, of course, 2024 April. But we're only on April 21st. This number is going to keep on going up. It's going to settle somewhere around the 28 to 2,900 mark. It's not going to beat June 2022, where we had 3,051, but that is already the second highest month on record going back 25 years. So let that sink in. When you subtract the difference between new and pending, this is right now the second highest month on record. We are only beaten by June 2022 at 3,051. There's the ratio. Last year, 0.72 ratio. Right now, 0.50 ratio. Just really amazing, just to show you what's going on. Really amazing. And let's keep on going right here. We can see that ratio. We're right at that 0.50 ratio. And we know where this puts us. I've been saying this for years, and we've always trusted this ratio. It's never let us down, that when we are around the 0.75, 0.6 to 0.75, we get a tangible increase in inventory. When we're right around that 0.6 mark, it transitions into a substantial increase in inventory. And I've said it before, I'll say it again. When we're at the 0.5 and under, it really simply means that the market has hit a wall in relation to new listings and demand. That's really what it means. It doesn't mean that product isn't moving. In relation to the availability of product, there's way more product available in relation to the product that is actually moving. And we're going to take a look at the high and low comparison, the bottom 25th percentile as opposed to the upper 25th percentile. What I call is the bifurcated market that we're experiencing in Austin, because the data that I just pulled this morning is super, super eye-opening, just so that you can see just simply how bifurcated the market is. There's that ratio 0.50. And we can see that so far for the month of April, it is the lowest April on record. The lowest April on record on that new listing to pending ratio at a 0.50. We have to go all the way back to 2003, where we had a ratio of 0.51. Active listings, 13,670. Let's keep on going right here. That's going to be the highest April on record. And let's take a look at the yearly information. I'm just going to keep on going, really take a look at the year. And we can see right here for the ratio for the year. So far this year, we are at a 0.66 ratio. That is the ratio so far this year. Now we can see that last year the ratio was at a 0.80, and then we've got 2 years ago, 2023 at a 0.83, 2022 0.83. We have to go all the way back to 2008, 9, and 10 to get a ratio, really 2008 and 2010, to get a ratio that was lower than the ratio that we're currently experiencing so far this year at a 0.66. Really just amazing just to see how low the ratio is, especially because of the number of new listings entering the market. So let's talk about that. Let's talk about the number of new listings entering the market. I'm on teamprice.com. I'm going to click on Insight and Statistics. I'm going to click on Active Residential Inventory. And let me make this a little bit bigger. And I am going to report to you that as of this morning, there are 15,564 active listings on the market. That is an increase of 124 from Friday, a 323 increase from last Monday, a 1,867 increase from last month. That's going to give us a month-over-month percentage increase of 13.63. And take a look at the year over year, 21.5% increase year over year. Number of pendings, 4,885, a little bit better than Friday, but we are down 4.5% on pending activity year over year, exactly the same day last year. We're lowered 4.5%. That's going to give us an activity index of 23.9 months of inventory. Now, let me show this to you because we've noticed a pattern shift right now. And by the way, Melanie, I did see your question right there over chat. If you could send that to me via email, I'll give you that information. Because we post this on YouTube live for everyone to be able to watch and all that. So this goes live. This goes live to everyone. Anyone and everyone can watch this. I am way more comfortable responding to your question via email. So thank you so much. Now we're going to notice a little bit of a shift right here. Take a look at short sales and see what's happening with short sales. Is that number going up or down over the past, let's just say year, since the beginning of the year, up or down? It's going down. Number of short sales, it's actually going down. Now, do you see a number here under special listing condition that's actually going up? Yeah, notice a default. So let me put this in perspective for you. Short sales are going down. Notice of default has doubled since January. Short sales are down. Notice of default has doubled since January. What does that tell you? Short sales are down. Notice of default doubled since January. Now, only 13. That's not a high number, but keep in mind, 13 is what's reported on the MLS, not the real notice of default. It's what's reported on the MLS. How do you find out the real number if you were to not rely on the MLS? Because this is just MLS information. The agent has to go there, do notice of default, advertise it as a notice of default. Is there another way to find a property that is currently experiencing a notice of default outside of the MLS? What do you think? Do you think there is? What do y'all think? Yeah, absolutely, right? So we've got Realist. So what we're going to do is we're going to take a look at Realist here really quick. Here's my screen. I've got a custom search, and this custom search right here has foreclosure. I've got a foreclosure custom search, and I'm going to select a few things so that you can see what is going on within our area. Let's just take a look at the city of Austin. I just want to select Austin. Okay, so we've got Austin right here, and I'm going to select a few different categories within Realist so that you can see what's going on. Let me go up here, foreclosure indicator, yes, in the city of Austin. Can you see that number? Yeah, that number goes up only in the city of Austin to 737 foreclosure indicator, yes. Let me delete this. Let's go to foreclosure stage, pre-foreclosure. That's going to be close to that notice of default. Okay, so that right there, they've actually issued that foreclosure notice. It's in a stage of foreclosure. Let's go auction, bank owned. Let's do the multiple values. We've got 737 right there. So whatever is on the MLS, I like to look at this simply as a comparison. But what's happening right now is that banks are issuing notice of default. They are foreclosing on the property. We're noticing more and more what's called deed in lieu of foreclosure, where the bank has taken the property and they're bulk selling the property without it ever hitting the MLS. That is what's happening to institutional investors. So it's keeping it off of the MLS. But even if we do rely on the MLS, we can see that the number of properties under notice of default has doubled since January. So where the properties are not selling within the short sale, we do have 22 pending short sales right now. A lot of short sales don't actually end up closing. Really difficult to close on a short sale, but we are noticing an increase in notice of default, pre-foreclosure, in foreclosure, auction. Of course, real estate owned, we're at 92. So all of those are increasing right now. Even HUD owned, we are at 14 right now for our entire area. Active listings were up 21.5%. Pending listings were down 4.5%. And this is the number that I want to share with you right there. Look what just happened. Look what just happened, you all. What does that tell you? We just broke the previous record that was set July 15th of 2024. Now, you can see this run up right here. Last year, the market started going up as far as number of listings in February, and it was from February all the way to July 15th of 2024 before we reached the record high, and then listings started going down, and that's just the cyclical nature of the market. This time around, the number of active listings started going up on the first week of January, as opposed to the first week of February. So we had a 1 month shorter window where people started putting homes on the market at a faster rate this year compared to last year. And then something really interesting happened first week of March. You see how this line changes? This line is very similar to this year. It's actually even a little bit less. And then look what happened first week of March. It just took off. The number of active listings currently in the market just took off. Combination of new listings, and less properties going pending. And right now, we just broke the previous record. Last year, it was July 15th that we reached the record. This year, it was April 21st. April, May, June, July. We've got 3 more months of inventory that's hitting the market. 3 more months. And how many listings are staying on the market, just kind of stacking up on the market? It's like every month we're noticing an extra 2,000, an extra 3,000 listings. So could we get up to the 18,000 listing mark? Really amazing just to see what's happened from the second week of March until now. That was not too long ago. Second week of March. I mean, that's just not too long. That's 5 weeks ago. Look what's happened in the past 5 weeks. We went from 12,000 to 15,564 active listings on the market in just 5 weeks. In only 5 weeks. And of course, we just reviewed this information, and you can see if you scroll back how many listings are being added on a weekly basis, week over week. We've got 500, 600, 600, 600, 700, 700, 600, 600, 500. That number is just going up. So imagine this time next week, we add another possibly 500 listings. That puts us at 16,000 listings. Who knows, right? Maybe some people are just going to not put their homes on the market. We really have no idea, but we are seeing a 16.9% increase on the number of new listings entering the market in April compared to April of last year. Let's look at a few more things right here. We've got 47.5% of all the active listings currently in the market have had a price drop. The city with the highest percentage of price drops is Wimberley at 58.7%. The city with the lowest price drop, Cedar Park, at 37% price drop. That's going to be the lowest one out of the top 30 cities that we track. Let's go ahead and look at a few more things right here. We are going to take a look at the sales density. This is where we are going to project the number of closings for the month. We are projecting a slight increase in closings compared to last month. Last month we had 2,572 closings. Our projection for this month is closer to the 2,600 mark. That is going to be a miss compared to last year. That is going to be an increase of 1.1% month over month, but that looks like it's going to be a double-digit miss compared to last year. Well, how do we come up with this number? Number one, if a property isn't pending, it doesn't close. So we take a look at everything that's already closed month to date. We forecast that based on the rate of closings on a daily basis, knowing that more closings happen in the last week of the month. But we also adjust that based on the decrease on the number of pendings that occurred over the past 60 to 25 days or so. So if we've got an 8.5% decrease in pendings over that time period, we are going to adjust that down, because if a property doesn't go pending, it doesn't sell. Now, we've been super accurate on our forecast on the number of properties closing, and that's why we can make this prediction. So there you have it, number of closed properties. Let me take a look at a few more things here for you. We've got, I want to focus right now on, we're going to skip activity index. We're going to do type of market city. Then we're going to do type of market zip code. And as of now, as of today, you can see here that this information was updated today. Out of the top 30 cities that we track, 6 of them are in a seller's market, 20%. 16 are in a neutral market, 53%. And 8 of them are in a buyer's market. When you look at zip codes, let's go back and take a look at type of market zip codes. You can find that under market sentiment and type. Let me open it up in a new tab. On the zip code side of things, let's make sure that this is loading. Just give me 1 second. There we have it. Okay, perfect. There we have a zip code. On the zip code side of things, let me make this a little bit bigger here for you. We are looking at, there we go, perfect. On the zip code side of things, we are 28 out of the 75 zip codes that we track are in a seller's market, 26, 35% in a neutral market, and then 21 zip codes, 28% in a buyer's market. Let me take a look at the graph that we have towards the end of this chart. And you can see all of these zip codes, which ones are slowly but surely transitioning markets. We have Liberty Hill 78642 at 6.94 months of inventory. My prediction is that that will transition from a neutral market over to a buyer's market in the next 14 days, simply given the number of pending properties that are currently on the market in Liberty Hill. And then we also have Del Valley still in a seller's market at 4.8%. That one's going to take a little bit longer to transition over towards a neutral market. I don't expect that to happen for, I'd say, another 21 to 30 days, but I do expect Del Valley to transition towards a neutral market. Once again, simply based on the increase of active listings that we're seeing in Del Valley, along with the decrease in pending listings. If a property isn't pending, then of course it's not going to sell. And if it doesn't sell, well, then we're going to have more inventory, and we've got less numbers to divide that increase in inventory by the number of sold. And that's going to make the months of inventory increase. And that's going to be our projection for Del Valley. So you're hearing me out, right? We've got an increase in inventory, record high inventory. What do you think's happening with pricing? And we've been talking about this. We've been talking about this for weeks and weeks and weeks. And we're going to keep talking about this. I'm going to open up market cycle, and then I'm going to open up the percentile analysis. Let's wait until those open up. On the market cycle route, let me make sure that this is up. Let me make this just a little bit bigger here for you. Yeah, we're up 6.6% month over month. We're up $38,000 month over month, not year over year. Take a look at that, $38,075. Year over year, we're up 21.184 thousand, 21,184. On the median side of things, we're up even higher on the median. We're up $32,320. That's only month over month. Year over year, we're up $10,000, 2.2%. And bifurcated market. You're going to hear me say this for the next year. This is a bifurcated market. And of course, we have the data to prove that. When you go to percentile analysis and you click on high end versus low end, it explains what is going on. And then we've got this really beautiful chart that has the bottom 25th percentile compared to the top 25th percentile. So the bottom 25th percentile means the bottom of the market, the least expensive homes on the market, compared to the top 25% most expensive homes that sold. This is all sold information. So this is going to be the accurate. Now take a look at the difference. On the bottom 25th percentile, prices are down 1.8%. And the price per foot also down 1.8%. The top 25th percentile, it's up a mind-blowing 5.6%. In the price per foot is up 0.6%. On the price per foot, 19 out of the 30 cities that we track are up. Amazing. That's why you see that green dot right there, and we count the number of green dots. That's 19. 19 out of 30 cities, the top 25th percentile is outperforming the bottom 25th percentile. When we look at zip code, the same thing is happening right there. Look at that. Down 1.8%, up. It's the same thing because it's, if the price goes up, this is all of it. This is across the board, everything. That is with sales down 23.6%. Number of sold properties down 23.6%. And yet the top 25th percentile is up 5.6%. The bottom 25th percentile is down 1.8%. I see there's a little symbol right there. I'm going to fix that, so I'll be sure to fix that. I just need to adjust the column to show that up. So that's what's happening, and we're going to be beating this drum for at least another 12 to 18 months. That is what's happening with the Austin market. We use the word that it's a bifurcated market. It's not the fact that, okay, sales are down. We get that. That's what's happening. It's the upper end is far outperforming the lower end of the market. Now, what's the benefit of that? Well, some amazing opportunities on the lower end of the market, and then also a lot of confidence within the higher end of the market. So there are challenges and opportunities within this kind of market, but we have to be able to explain to clients and to each other, and we have to understand how in the world, like you just got done spending 40 minutes telling me how inventory is hitting sky high. We've got a decrease in pendings. We've got an increase in notice of default. We've got all of this going on, and yet prices are going up. That is why I'm going to keep on talking about this, because we have to understand what is happening with the market. Now, a lot of really interesting things happened here towards the end of last week, because we had a few articles hit all of the economic websites related to D.R. Horton, because D.R. Horton just issued their forecast for this next year. And we can see right here. Let me go ahead and just move this article to my screen. D.R. Horton lamented a slow spring and more home builder earnings are coming up. This article was posted last week. Let's take a look. Just a few days ago, actually, the 18th. And I'm not going to read the entire article, but it basically says D.R. Horton on Thursday became the latest home builder to raise concerns about housing market as it fell short of estimates. So let me give you a few numbers that you can digest related to the market. The reason I like looking at D.R. Horton is because they are America's builder. I mean, they're the biggest home builder in the entire country. And they experienced a drop of 15%. That's orders. So national sales orders plummeted by 15% in Q1 2025 compared to Q1 2024. We are in the South region. In the Southeast, in the Southwest region, we're in the Southwest region, saw sales decline of 20 to 25% year over year. Now, the Eastern region declined by 5%. In the Northern region, actually just stayed flat year over year. And of course, we're noticing what's happening with their stock. Well, it's down 37% over the past 6 months. They deliver over 80,000 homes per year. So they've got a really good pulse on the market. Sales values for D.R. Horton dropped in 24 states from February to March. That's half of the country. So half of the country's sales actually dropped. And what are the top states where sales are dropping? We've got Colorado down 0.44. We've got California that's down. Florida, that's going to be the third largest decline. And then, of course, we have Texas. And Texas is actually experiencing one of the largest declines. Now, here are all the cities that experienced more than a 0.5% monthly decline in pricing. If you were to annualize a 0.5%, well, that comes out to 6% per year. Now, this is monthly. So I'm going to list the cities that experienced the single greatest declines for D.R. Horton. That's going to be Punta Gorda, Florida, Cape Coral, Florida. We've got San Jose, Sarasota, Naples, Austin, Denver, Deltona, LA, and then Port St. Lucia in Florida. So it was really interesting news that came out for D.R. Horton. And now we're just waiting for other builders. Like, hey, builders, what's going on? What's happening? Of course, they have to report this information because they are a publicly traded company. And they just came out like, hey, we're going to have to revise our forecast because we are noticing less demand for existing homes currently on the market. They're being very aggressive with their price drops, with their incentives for buyers, with their rates. As a matter of fact, I've been searching a lot of D.R. Horton, a lot of articles on D.R. Horton, and guess which ads I'm now getting? 3.99 30-year fixed D.R. Horton in the Austin area. So they are pushing inventory. So for those buyers that are looking at wanting to get a really good rate and good product at a good price, that's an option right there because their inventory is increasing quite a bit. I do expect more pricing pressure within our area for new construction and really across the board. But there's the information for D.R. Horton. Just Google D.R. Horton 2025 sales forecast, and you can read a ton of articles on this. Now, the other thing that happened is that Zillow also came in and downgraded their 2025 home price forecast. This was also released just a few days ago. And on Tuesday, Zillow economists published their updated forecast model projecting that U.S. home prices, as measured by the Zillow Home Value Index, will rise 0.8 between February and March. That's another downward revision. Last month, their forecast was 1.1. The month before that, it was 2.9. So they said, okay, we're going to go from 2.9 to 1.1, now to a 0.8. So they're slow walking the data. My expectation, just give it about another 2 months or so, and they're actually going to go negative on their 2025 home sales forecast. That's my expectation. That's what the data is telling me. Now, of course, we've been here in this kind of market now for 3 years, but this is a new market for the rest of the nation. For us, we're actually seeing an improvement compared to 2023. So for us, like, hi, well, the pain is mostly over. It's almost like we've gotten used to it. But for the rest of the country, this is really just a brand new thing. The rest of the country is slowly but surely catching up with the reality that we've been experiencing now since the market peaked May of 2022. So there's a lot going on with the market right now. A lot of headlines. A lot of people are now entering a consensus mode that real estate across the nation is overvalued and that we are due for a market correction. Of course, us here in Austin, we've been in this market correction. There's still a little bit of pain and a little bit of pressure, especially with the increase in inventory, along with the decrease on the number of pending. That is going to provide some pricing pressure for us for the rest of the year. It always happens. You take a look at the new listing to pending ratio. This is going to be that tried and true indicator that we can rely on all the time. And when that ratio starts entering that 0.6, 0.55, we know what's next. We know that there's going to be pricing pressure, that values are going to drop, that sellers are going to have to adjust their pricing. That's just the reality. It is 10:52 right now, and any questions, comments, concerns, criticisms, complaints? Any questions, comments, concerns, criticisms, complaints? Well, thank y'all so much for joining. Super appreciate it, and I will talk with you soon.